Hi, I'm Pattu from FreeFinCal, and in this video, let's review the performance of ICICI Prudential Value Discovery Fund. This is one of the best-known value-oriented mutual funds in India, and fund manager Shankar Narain got part of his fame from managing this fund. Of course, he's not the current fund manager, though. So, before we begin, you can follow me on Twitter at FreeFinCal. So, what is the investment strategy of the fund? So, let me just take a quote from the scheme document. The universe of stocks for this scheme will be defined as those stocks whose prices are low relative to their fundamentals, their historic performance, their book values, their earnings and cash flow potential, and current or future dividends. So what essentially this means is that the fund will take a stock from a particular industry and look for stocks with low price to earnings ratios, low price to book values, high dividend yields, and it will also look at qualitative indicators of management competitiveness, business competitiveness, and growth prospects. And it will define the low and high values of these ratios for each sector or each industry, and pitch stocks across the market cap. Although it has gained a reputation as being a large capish fund recently, probably because of its recent increase in AUM. So this is the last 3-year performance of this fund with the Nifty 500 total returns index. Total returns index means the dividends have been treated as reinvested. So this is the last 3-year performance. So what you're essentially seeing is the last 3-year return if I consider this data point and the final data point. So that's a significant drop in performance. So many investors are worried about it. So let's have a look at the rolling returns and rolling risk. This means I calculate every possible 3-year returns, 5-year returns, 10-year returns, and also calculate volatility of price over those periods. So this is the rolling 3-year returns. So in every one of those curves, there are about 2,400 data points. So the red line, if you can spot the red line, it's buried underneath. The red line represents Nifty 100 total returns index. The blue line, which is kind of prominent, is the Nifty 500 total returns index. The green line is what we are looking at, the ICICI Value Discovery Fund. We are looking at the regular plan and not the direct plan because we need the higher history. Of course, you should always invest in the direct plan. Then the black line is the Nifty Large Mid Cap 250. So this is Nifty 100 plus Nifty Mid Cap 150. Or this is known as the top 250 of the Nifty 500. Motilal Oswal is coming up with an index fund for this. So I thought it will be interesting to add that. I think it's considering that Value Discovery can invest across market cap, large mid cap 250 is a reasonable benchmark. The pink line is ICICI Prudential Equity and Debt Fund, or ICICI Balanced Fund as it was known earlier. The orange line is ICICI Prudential Balanced Advantage Fund. Now, the equity and debt fund is an aggressive hybrid fund. So it's essentially you will have about 20-25% or maybe 30% of bonds. The balanced advantage fund is a dynamic asset allocation, or it follows tactical asset allocation based on price to book value. It's been doing that since 2010. The ICICI equity and debt fund is a low risk, good reward, reasonable reward kind of fund, and the balanced advantage is even lower risk and fairly for that kind of risk is fairly good reward. So ICICI equity and debt fund is expected to have a little more reward and a little higher risk than the balanced advantage. So please pause the screen and have a look at those lines. You can see that the green line, which is the fund that we are currently considering, has had a good track record. It has got the regions of outperformance. Although if you notice that the returns themselves over 3 years can be highly volatile, it has done quite well over 3 years. Maybe there is a dip in performance recently. You can see that for the last couple of years, maybe. No one can tell whether it will last or it will change and so on. So this is the rolling risk over those every possible 3 years. So in this case, if the line is lower, then the risk is lower. So you can see that the green line has got a lower risk compared to Nifty Large Mid Cap 250, Nifty 100, and the Nifty 500. Of course, it has got higher risk than the hybrid funds of ICICI, the pink line and the orange line, but that's expected. But for that higher risk compared to those funds, it does deliver good reward. So, and it has got lower risk compared to the broad market equity indices, and it has delivered higher returns. So you cannot ask for much. And this is the same data for 5 years, and there are about 2,900 points there. 5-year performance has been much better than the 3-year performance for ICICI Value Discovery. You can see that the outperformance is higher, but you can notice also that there is a volatility in performance. This volatility in performance is typical of value-oriented funds or even the value-oriented indices, as we will consider in another video. Again, this is the risk, and the risk profile is similar. It has got lower risk than the broad market indices and a bit higher risk than the hybrid funds. And this is over 10 years. We have about 600 data points, which is not much, but decent, I would say. So, and the outperformance of the value discovery fund is exceptionally good here. There's no problem. There's no doubt. It is bet everything else. And also, the risk profile is also similar. Lower risk than the broad market equity indices. So the fund, I mean, what more can you ask of the fund? It has over 5 years and 10 years, it has given the investor better returns at lower risk, and that's fantastic, isn't it? So the summary is that, okay, before that, let me, if you click on the link below, you will see the performance of ICICI Value Discovery versus Quantum long-term equity. I didn't want to include it in the video. So I think it's a good fund. There's no problem, but it has underperformed recently, but it has got a good track record. If you believe in value investing, I think this fund is fantastic. The fund house has had a good record of picking value stocks, so there's no problem there. You can hold on to it if you're an existing investor, but recognize it will test your patience. So you have to be patient and give the fund enough time to perform. 5 years, maybe even 10 years, 7 years, whatever. So existing investors can definitely hold on to the fund. It's a good fund. New investors must understand that this will not perform immediately. It will underperform, and you have to be patient, and so on. Another question is how much of your equity portfolio can be a value fund. It depends on the kind of investor you are. If you're a patient investor, even it can be a core portfolio of 30-40%. That's really not a problem. So all in all, it's a fantastic fund and worth investing in. So I'll catch you again in another video. Excuse me for my voice, it's kind of gone. So bye bye.